Hello guys. So today we will discuss CMA Inter Group 1 Paper 8 costing. Okay. So under that we will discuss standard costing. Uh, we will try to understand the meaning of standard costing and the objective of standard costing and the usage of standard costing, and also formula related to standard costing, and also we'll work out the problems related to standard costing. I hope this video will be sufficient to cover for conceptual understanding also, and also for practice purpose also this will be useful for you, and the examination point of view also this video will be definitely useful for you. So you please patiently go through the video. We will discuss the topics one by one. Okay. So before getting into the direct topic, generally costing, we know the basic meaning and techniques of costing. Techniques of costing. Why there is a techniques of costing? What is the purpose of technique? By applying the technique, what the benefit we will get? Ultimately, we will save the cost. Correct? We want to spend less. For that, we have to implement a lot of techniques. Maybe marginal costing, that is one technique we already discussed. In marginal costing there is two type of cost. One is variable cost, other one is fixed cost. Okay. So likewise you have budget also, that is also one of the costing technique. So similarly standard costing. So the purpose of technique is we want to do some savings, cost savings. Effectively, efficiently we have to run the business. We have to reduce the losses. Why we have to reduce losses? Why we have to do effectively, efficiently business? Ultimately, that everything should be related to amount, finance. That is costing. We have to spend less. For that reason only we are putting all this plan, all this budget, all this vision, mission. Everything is based on creating value to the business by spending less. By utilizing the resources properly, like that there are many things is there. Now come to the topic, standard costing. What is standard costing? So if I wanted to spend something, if I want to spend some money, or if I want to spend some material for production, or if I want to deploy the labor for my production activity, can I spend whatever the material I want? Can I spend whatever the labor wages for my labors? Is it acceptable practice? Is it acceptable or not acceptable? Generally, if you are doing some business, any business, manufacturing or services, any business, you are the employer. For example, you are the owner of that business. What things you will keep in your mind? You want to spend less, you want to make more profit, you want to create more value to the customer. That will be the objective. In a short term you want to create profit, in a long term you have to create value to your customer. Mission you want to achieve your objective. For that you have lot of techniques. So one of the technique, by implementing the standard costing, I will say, for producing this particular product we have to spend this much only. For producing for this particular product output I have to incur this much cost only. That is the standard costing. Actually I am planning my cost. So employee will come and will ask lot of money from the owner. Sir, we have to spend for this material this much, we have to spend labor this much for this activity, so give us money. How to control all these things? I cannot spend whatever I want, because it's a competitive world. Correct or not? It's a competitive world. We have to spend money in an economical manner to achieve the competition, or to to bring our company into the very good prospective. We have to spend less. Like that there are many objectives. Ultimately how to achieve this objective? To achieving this objective, One of the tool is standard costing. One of the tool is standard costing. How the standard costing will helpful, sir? As a owner, as an engineer, or as an experienced person in that particular production department, you know how much to spend, you know how much material I have to incur, you know how much amount I have to spend on my labor. Then you are going to fix some standard. Okay, for this product, this is the quantity I am going to use. For this product, this is the purchase price, material price I am going to incur. For this activity, this much skilled labor I want. For this activity, this much only I will pay to my labor. That is standard. So based on that standard, I will start my business, and I will work, and I will spend for material, and I will use material for my production, and I will deploy labor, and I will pay wages to labor. After that some period, what will happen? I will compare my standard versus actual. I will compare my standard versus actual. How much I predicted, how much I planned, that is my standard. Standard is based on the lot of industrial benchmark. It is like a benchmark, okay? But actually how much I spent, standard versus actual. Then I will compare. This is I planned 10,000 rupees is my planned expenditure. How much I spent? How much I actually spent? 9,000 rupees. 10,000 is my expectation, but I spent only 9,000. Tell me whether it is whether the company is performing well or not. Yes, they are performing well because their actual is lesser than standard expenditure. Correct? So this is a favorable to the company. So like this, lot of variances. Say for example, in cost sheet you have majorly three heads, three expenses, that is direct material, direct labor, direct overheads. Correct? So all these expenses you have some standard. In a company, majorly they have a standard for direct material, they have a standard for direct labor, they have a standard for direct overheads. So in a particular period or in a particular month, every time they will compare standard versus actual. What is my direct material standard? What is actual? What is direct labor standard? What is actual labor? Like that they will do comparison by identifying the variance. That is variance analysis. What you can say? Variance analysis. By implementing the standard costing, I can do the variance analysis. What is that variance analysis? Variance analysis is nothing but why you spent extra, why you spent less. That also, if you spent extra, that means you have spent more, means then you have to question the departments. All the company employees, the particular department, you have to ask why you spent extra. Our standard cost is only 10,000, but you spent 13,000 rupees. Extra 3,000 rupees you spent. Why that 3,000 extra? That is variance analysis. Okay. So with this basic understanding, we'll move to the topic. So trying, remembering the formula and working out the problems. That is how normally students try to do that, but don't try to do that. You should understand meaning of standard costing. You should understand the meaning of standard costing. Why standard costing? What is material variance? What is cost variance? What is price variance? What is mix variance? You should know the meaning. Then you can write automatically formula if you know the meaning. Okay. So we will proceed one by one. So standard costing, same enter group 1, paper 8, cost accounting. Under that, as per theoretically, what is standard costing? You'll understand that. The predetermined cost that is calculated at the management standards of efficient operations and relevant necessary expenditure. and relevant necessary expenditure. Okay, predetermine, I am determining in prior, I am planning in prior. Okay, that is predetermined cost. That is, I am fixing some standard on the, for that standard what is the cost, that is predetermined cost. That standard means what, sir? In case of material, how much material I should use for producing this output. In case of that same material, how much I spent for purchasing this material for producing that particular output. So quantity, price, this is two standard actually. This is two area, based on that standard costing is fixed. What is, they will fix standard quantity and they will fix standard price and they will compare with the actual. Okay, what is the next one? So standard cost and estimated cost. Why I am discussing this one? You may expect some theory question in examination. That is why I am discussing the standard cost and estimated cost. Standard cost is what, sir? As I said, it is a planned cost. To reduce my cost, to control my cost, I am planning something in prior. That is the purpose of standard cost. Estimated cost is what, sir? Then this is like approximately I am estimating some cost based on my past experience. I am not doing any technical thing. I am not working out anything technical. I am not an engineer. Okay, technical engineer. I will simply say based on my experience, this much we can pay. I am estimating this much. So standard is an accurate one. Estimated is an approximated one. You got it on what I am saying? So standard is like, you know, arriving. That standard cost is arrived after by lot of technical things. Input output ratio, loss percentage, wastage, everything is counted and the standard cost is arrived. But in case of estimated cost, simply based on the experience, past data, I will say some cost. Both are not same actually, both are different. Standard is arrived after doing lot of accuracy techniques. So estimated costs are intended to determine what the cost will be. Standard cost at what cost should be. So estimated cost is approximately, I am saying this is what we can expect. But in case of standard cost, the management will take decision. This is what should be. This should be we have to achieve. Okay. For performance, standard cost will be taken. Estimated is like an expected cost. Then what is the next one? Estimated costs are based on average of past actual figures adjusted for anticipated changes in future. Anticipated wastage, spoilage and inefficiency, all of which tend to increase costs are included in estimated cost. So simply based on my past experience, based on past expenses, I am estimating the future. Okay. But in case of standard costs are planned cost determined on scientific basis. What is the scientific basis, sir? We know scientific basis means percentage, ratio. What is the material total output is how much, input is how much, percentage of material x, y, z how much, percentage, proportion how much, 1:2:3, 3:4:5, like that I have to define the input versus output. That is scientific basis. Okay. Then in estimated costing system, stress is not so much on cost control, but costs are used for the other purpose such as fixation of prices to be quoted in advance. Standard costs serve as effective tools for cost control. Of course, estimated cost is simply I am not bothered about cost control, that I am expecting this much. But in case of standard cost, I will bother about cost control. I have to achieve my actual. It should be less than my standard. Then only I am spending less. Okay. Next slide. Process of standard costing. Process of standard costing means you know the meaning of standard costing. You know the meaning of standard costing. It is a planned cost for the purpose of cost control, for the purpose of achieving the efficient and efficiency. Standard costing is introduced. How to fix this standard costing, sir? What is the standard costing? In standard costing, what will happen? What all things will happen in standard costing? So first thing is setting of standard. That is the first thing. Setting of standard means what, sir? as I said, for producing particular output, what is the raw material I should, how much quantity of raw material I should use, what is the price I should pay for this raw material. That is setting of standard. Got it or not? So I'm setting, how I'm setting, sir, that is based on scientific manner and also experience, technicality, all other manner, with an experience of group of experienced people, they will use to set standard based on the market and the industry and the benchmark. They will consider all the factors and they will come with some standard. Determination of actual cost. Once you set the standard and you actually, what will do next thing, you will spend, you will purchase material, you will make production, then that is actual cost. Whatever you are spending is an actual one. Then comparison of standard cost versus actual. So you already set the standard and you also incurred the expenditure. Now you have to compare both. Why you are comparing? Then only you can do variance analysis. Why you are doing variance analysis? Then only you know where you spent extra, where you spent less. Okay? By what is the use of variance analysis? After doing variance analysis, you will try to do better in future. We should try to reduce a cost in this area. We have to reduce. We are spending more on that particular area. So in future we have to reduce. That is variance analysis. Finding out the reasons for variances, taking corrective action and disposal of variances. Corrective action is being more productive in future, or reducing losses, reducing wastage in future, or bringing more efficiency in the work style of the employee of the company, like that. That is a corrective action. Types of variances. So the next thing is types of variances. What is the types of variances? So variance means what I said, that is a difference between standard versus actual. That is the difference between standard versus actual. You will get variance. Types of variances. Under that you have two types of variances. One is, you can expect 1 or 2 marks question from this. That's why I am discussing all these things. Okay. So types of variances: controllable variances, uncontrollable variances. The controllable variances means if anything is incurred extra by the company, that is variances. Maybe adverse variances, you can say adverse variances. So controllable means in future I can reduce that expenses. In future I can reduce that variance level. That is controllable in nature. Controllable variants are those which can be controlled by the departmental heads. That is the, if this year I spent extra, sir, this next year I can reduce these expenses. That is controllable within the organization. Uncontrollable variances. Uncontrollable variants are those which are beyond their control. However, controllability is a subjective matter and varies according to situations. If the controllable variances are of significant nature and persistent, the standard may need revision. So controllable, you can easily control within the organization. There are some uncontrollable variances. Things are not under the control of the management. For example, supply is not there, or else we have to depend that particular product from another country. That country is not supplying the product. Then you have to spend more to procure that product. You have a regular deal with China. So what happens? Due to the present political situation, you are not able to buy the raw material from China. Then you have to procure from other countries. You may incur more. That is not in your control. Correct? So like that, many examples. Favorable variances, adverse variances. What is this favorable variances, adverse? Favorable means what? Favorable means I am spending less, so it is favorable. Adverse variance means what? I am spending more, then it is an adverse. How to identify that favorable? For example, your standard is 10,000 rupees, standard costing is 10,000 rupees, but actually is 9,000 rupees only. So 1,000 rupees is favorable because I spent less compared with my standard. But in case of adverse, standard is 10,000 but I am spending 11,000. So 1000 is adverse because I am spending more compared with my standard. That is favorable, adverse. Favorable we have to mention F, adverse we have to mention A. Okay, in a simpler terms. So what is the next one? So there are many variances, as I said. In your cost sheet you have material, labor, overheads, fixed overheads, variable overheads. Likewise you have many expenses, correct? But group 1 paper 8, this particular topics, they are focusing on two variances. One is material, another one is labor. One is material, another one is labor. Even you have sales variances also. Sales, budgeted sales, actual sales. That variance is also there. That is, I think you have in group 2 all those variances. Other variances, fixed overhead, variable overhead, it's all you have in group 2. Group 1 level paper 8 paper 8 you have two variances. One is material variance, another one is labor variances. Okay, what is this direct material variance? What is direct material? Meaning of direct material. Direct material meaning what? It's a raw material used for the purpose of production. Okay, so under this what variances will come, sir? Under this what are the types of variances will come? Price variances, usage variances, price variances and usage variances. What is this price variances? What is this price variances? I am fixing standard price 10 rupees per kg, but actually I am purchasing at 12 rupees per kg. Yes, there is a price variance because you, as per your standard 10 rupees only you have to pay, but you paid 12 rupees extra. How much you paid? 2 rupees per kg you paid. That 2 rupees is a price variance, adverse, because you are paying extra. Usage variances. What is usage variances? Usage means what? What is the meaning of usage? How much you have to use, that is usage, correct? Usage means how much you have to use. How to relate with material? How much material you should use for producing this product? For example, you have to use 100 kg, but how much you used? You used 110 kg. Actually you have to use how much kg? Only 100 kg. Extra 10 kg you used. That is usage variances. That 10 kg, that is an adverse one. Okay, so 100 is a standard kg, but actually you used 110 kg. So 10 kg extra you used, that is an adverse variance. But here standard is 100 kg, actually you used only 90 kg. Standard is 100 kg, but actual production they used only 90 kg of raw material. Then it is a favorable variance because you used less. You are eligible to use up to 100, but you used only 90. So you are performing well. You are more efficient than the standard. Appreciable. That is the meaning of price variance. That is the meaning of usage variance. You should not mug up simply SQ into SP, AQ into AP like that. Then minus 1 minus 2, 2 minus 3. All those things and all secondary. First you have to understand the meaning. What is price variance? What is usage variance? All those things. So this is for direct material. So this is what we are going to do. This is what we are going to work out. Price, usage. Price is related to product, material. Usage is related to quantity. Two players, only two characters. One is quantity, another one is price. Based on these two characters only, factors, these two factors only, we are going to work out the problem. Direct material variance is over, and another one is labor cost. Labor cost variances. What is that labor cost variances? So what is this labor cost variances? Raw material is under the cost sheet. One of the major expenses is direct material. Another one is direct labor, correct? So direct labor. Here also there is two factors in quantity. There is two factors in direct material variance. One is material, another one is price. Here instead of material, here labor hours There it is price, here it is rate, labor rate, labor rate per hour. Okay, there it is quantity, here it is hours, there it is price, here it is rate. All other things same logic, same formula. There it is quantity, there it is a raw material, here it is human. So hours, how much hours the people should spend. For example, rate variance, I will pay 100 rupees per hour. I will pay 100 rupees per hour. That is my standard. Actually, how much you are paying? You are paying 120 rupees per hour to your labor. So you are paying extra. That is an adverse variance. You got it or not? What I am saying. Then what about efficiency variance? Similar to usage. Usage means here it is efficiency. Okay, efficiency means what? 1 hour, if the person is spending 1 hour for that particular activity, he has to make production of 100 units. 1 hour per hour, that person should able to make production of 100 units. You got it or not? That particular A labor name is A. That labor name A, he should produce 100 units per hour, but actually he is producing only 90 units per hour. That is efficiency variance. For 1 hour you have to produce 100 units, but you are producing only 90 units. So 10 units you are producing less. That is efficiency variance. You are not at all efficient. Or if you are efficient, how can we identify that? For 1 hour 100 units you have to produce, but you are able to produce 110 units. Then you are more efficient. That is efficiency. Okay, we will discuss sub usage, yield, idle time, like sub usage, mix yield, all those things. All are part and parcel of efficiency variances and usage variances. So first of all, we will cover the material variances, related formulas, and we will work out the problems also. Then we will go to the labor variances. So now we have to discuss the variances under the material. Okay, what is the first one? Direct material cost variance. What is this direct material cost variance? What is this direct material cost variance? This is the ultimate answer after doing lot of mix, yield, usage, price. Then ultimately you will get this direct material cost variance. Simple. This direct material cost variance is nothing but, say for example, standard quantity for producing something, I have to incur 10 kg of raw material. I have to incur how much? 10 kg of raw material. For producing product A, I have to incur 10 kg of raw material. Okay, and 1 kg of raw material is 10 rupees. 1 kg of raw material, standard price, I am saying standard price. 1 kg of raw material is how much? 10 rupees. Okay, standard price. Then actually how much I have to spend? 10 kg into 10 rupees. 10 kg into 10 rupees is how much? 10 into 10, 100. 100 I have to spend. That is my standard cost, correct? Actually how much I am spending? For example, actually I am spending, actually I am using 11 kg. Actually how much I am using? 11 kg of material, and the price is also 11 rupees I am paying. Actually how much I am spending? 11 kg of material, and the price is also how much I am paying? 11 rupees per kg. Then 11 into 11 how much? 121. That is my actual. My standard is how much? 100, and my actual is 121. This is direct material cost variance. SQ into SP. SQ into SP. What is that SQ into SP? I will show you the formula later. But as for the time being, in your mind you should able to formulate the formula. formula. Standard quantity into standard price minus actual quantity into actual price. Standard quantity is 10 kg. 10 kg into standard price is 10 rupees. So 100 minus actual quantity is 11 kg into actual price, that is 11 rupees. 121 equal to 121. 100 minus 121 equal to 21 rupees. Variance or adverse? Sorry, favorable or adverse? Adverse, because you spent more. Okay. If you feel confused, then don't worry. We'll have a proper flow charts. I will show you the flow charts and I will show you the formulas and all. Okay. I am trying to explain you the meaning of this variance. Meaning of this variance. Direct material price variance. What is this direct material price variance? As I said, I will pay only 10 rupees, that is my standard. But how much I paid? 11 rupees per kg. That is price variance. Extra 1 rupee I paid, that is price variances. I am not reading here actually the language and all, just you go through yourself. Okay. What is the next one? How to calculate that formula? So here the formulas is explained. Standard price into actual quantity minus actual price into actual quantity. Okay. Then direct material usage variance. What is the meaning of material usage variance? As I said initially, 10 kg only I will use, but I used how much? 11 kg. 10 kg only I have to use, but how much I used? 11 kg. That extra 1 kg is the adverse usage variance. That extra 1 kg is the adverse usage variance. That is direct material usage. Usage is related to quantity, price is related to price, then cost is related to both quantity and price. Comparing both quantity and price together in one element. Okay. Formula. Standard quantity for actual output into standard price minus standard price into actual quantity. I'll have a separate flow chart for this. Anyhow, you just go through the formulas and all. Then what about the next one? Direct material mix variance. What is this mix variance? When it will come? Mix or sub usage or yield, when it will come normally? Mix variance. If you have only one raw material, then mix will not come. Normally mix will not come. When the mix will come? Say for example, for producing product A, you are using 3 type of raw material: X, Y, Z. X, Y, Z. Okay. Then this mix will come. Direct material mix variances. How it will come, sir? How we have to identify that? All those things better while working out the problem I will explain. Okay. While working out the problems, I will explain what is this mix, how to identify this mix variances. This is nothing but if you have more than one raw material for producing the output, in such a case mix variances will come. Okay. For example, my standard is X I have to spend 100 kg, Y I have to spend 100 kg, Z I have to spend 100 kg. You got it or not what I am saying? So totally how much I have to spend? 300 kgs of raw material. X, Y plus Z. X is 100 kg, Y is 100 kg, Z is 100 kg. Total how much? 300 kg I am spending. Correct? But actually I am spending 330 kg. Total together. After adding X plus Y plus Z, actually how much I am spending? 330 kg. Actually is 330 kg. But standard is 300 kg only. Standard is 300 kg only. That is how X 100, Y 100, Z 100. Got it? But actual X 110, Y 110. Forget about. But total X 110, Y 110, Z 110 equal to 330 kg. Now what they are trying to say here is direct material mix variance is is nothing but what is the revised standard mix, for your actual output. What is the revised standard mix for your actual output? How to identify that, sir? That and all we will work out while problem will directly work out in problem. Okay, better not to discuss much about that now. We will work out the problem later. So the formula is mix variance equal to revised standard quantity minus actual quantity into standard price equal to RSQ into SP, AQ into SP. Okay, then direct material yield variances. This also we will discuss while working out the problem. Formula for that: material yield variance equal to standard yield for actual mix minus actual yield into standard yield price. So the formula, what is the first thing? 1 2 3 4. So this is the box, this is the structure. SQ into SP. What is SQ? SQ is nothing but standard quantity into SP. SP is what? Standard price. Then RSQ. What is that RSQ? What is that RSQ? Revised standard quantity. Revised standard quantity into SP, that is standard price. Okay, then actual quantity, AQ is nothing but actual quantity into SP means standard price. Then actual quantity, fourth one, actual quantity into actual price, that is AQ into AP. So first one is SQ into SP, that is standard quantity for actual production. Standard quantity for, so SQ is what? Actually standard quantity for actual production or output. This is what very very important. SQ is what? Actually standard quantity for actual production or output. What is the meaning of that one, sir? What is the meaning of that one? For producing the output, what is the standard quantity required? That is standard quantity for actual production. For producing the actual output, what is the standard quantity you have to keep? What is the standard quantity you have to maintain? That is standard quantity for actual production. SP, standard price. Then AQ, actual quantity of material consumed. Then AP, actual price. Then RSQ, revised standard quantity. Then SQ into SP equal to standard cost of standard material. Yes, of course, how much I have to spend, how much I have to use. Usage into spent equal to standard cost of standard material. How much I have to spend is standard quantity. Sorry, how much I have to use my material, that is my standard quantity. How much I have to spend for buying this material, that is my standard price. So standard quantity into standard price equal to standard cost of standard material. Revised standard quantity into standard price, that is revised mix of standard mix for revised, what you can say, RSQ into SP, that is revising the standard for the actual output. That we will discuss, revising the standard for the actual output. Then actual quantity into standard price. Then actual quantity into actual price, that is actual cost of actual material. Then formula continuation. So what is the first one? Sub usage or yield variances. Sub usage or yield variances is what? Actually how it is arrived? 1 minus 2. Sub usage or yield variances is arrived by 1 minus 2, that is XQ into SP minus RSQ into SP will give you sub usage or yield variances. Then material mix variances. Material mix variances will give you by minusing 2 minus 3, that is RSQ into SP, AQ into SP. Okay. Then material usage variance. Usage variance is the result of 1 minus 3, that is SQ into SP minus AQ into SP. SQ into SP minus AQ into SP. Then material price variances will the result of AQ into SP minus AQ into AP. Then material cost variance, this is the ultimate one, that is SQ into SP minus AQ into AP. Okay. Just go through these formulas. Just go through these formulas before working out the problems. You please go through these formulas. That will be easy to understand the problems while working out. Okay. So what is the next one? So this material sub usage variances plus material mix variance equal to material usage variance. Material sub usage variances plus material mix variance equal to material usage variances. How, sir? We will work out that. I will show you how it is possible. Okay. We will work out the practical problem and you will understand. Then material usage variances plus material price variances equal to material cost variances. So why I am explaining all these formulas? I don't like to explain always, just simply reading the formulas. But before getting into the problem, you should be able to know the basics of formulas, how to calculate and all those things. You please take notes on this also. Then it is very easy to work out the problems actually. If you know this formula properly in this proper structure, it is very easy to understand. First point is you have to know the meaning. Second point is you should remember the formula also. Whether you are remembering by understanding the logic, or whether you are remembering by trying to mug up, that is different. But I always suggest go by logics, go by concepts. Okay, then only you need not to worry about remembering. You need not to mug up, automatically it will come. Okay, so we will what I plan is, first we will complete the material variances, then we will move to the labor variances. Okay. Look at this problem. Illustration 1. Illustration 1. So illustration 1, what is this question? Just go through the question first. Product A required 10 kg of, so there is a product A, that product requires 10 kg of material at a rate of 4 per kg. Got it? Requires means what? We have to assume that is standard. As per standard, this product requires 10 kg of material and the rate is also 4 per kg. Standard quantity is 10 kg, standard price is 4 per kg. Okay. The actual, they give the continuation, you just go through. The actual consumption of material for the manufacturing of product A comes to 12 kg of material at the rate of 4.5 per kg. Actually is 12 kg they are spending and the rate is how much? 4.5 per kg. Now forget about all these variances. Now forget about cost, price, quantity, remembering mix, yield. Mix and yield will not come for this problem because there is only one raw material. Mix and yield will not come for this problem because there is only one raw material. If there is a different type of raw material, then only the mix and yield will come. So here what I am trying to say is, forget about all these formulas. Forget about all these formulas. Just go through the question and you can try to say whether it is an adverse or favorable. Adverse variance or favorable variance, by reading the question itself you can say. Just compare first usage variance. Usage means what? Usage means what? How much quantity I should use, but how much I used. Actually, how much I should use, but as per standard how much I use, but actually how much I used. As per standard how much I should use, but actually how much I used. That is usage variance. So here, as per standard how much I should use, 10 kg, but actually how much I used, 12 kg. 10 kg versus 12 kg. Whether I used extra, whether I used more, whether or I used less. I used more kgs. 10 kg is my standard, but how much I used actual? 12 kgs. So extra 2 kg I used. So whether it's an usage variance will be adverse or favorable? Adverse only, because you used more. You used more than the standard. You incurred more, means you utilize the raw material more actually. Okay. Then come to the rate. Come to the rate. Actually, how much I fixed? How much I fixed standard? 4 per kg only I fixed. Got it? That is my standard price. How much I used? Actually, how much I spent? Rather, used you can say spent. How much I spent? 4.5 per kg. Actually, I have to spend 4 kg, 4 rupees per kg, but I am spending 4.5 per kg. I am spending more or less? I am spending more. So my price variance also, I am spending more or less? More. So that is also an adverse. 0.5 rupees, 0.5 per kg is adverse. So my usage is also adverse. Price is also adverse. Then definitely my cost variance will also be adverse. Correct? Then what is cost variance, sir? Comparing both quantity and price at the same time. Comparing both the price and the quantity at the same time. What is that? How to compare that, sir? What is the standard quantity? 10 kg. What is the standard price? 4 per kg. That is 10 into 4 equal to 40 rupees only. My standard total how much I have to spend? 40 rupees. But how much I spent here? 12 into 4.5, which is how much? 12 into 4.5, how much is coming actually? Around what you can say, 48 plus 6, 54 rupees you spent. Actually you have to spend only 40 rupees, but you spent 54 rupees. Difference is how much? 14 rupees extra you spent. Because of excess quantity usage you spent extra, and also because of you purchased by paying extra. Your price is also extra, 4.5 rupees per kg. Actually standard is only 4 kg, 4 per kg, but you spent 4.5 per kg. So quantity also you used extra, and price also you paid more. Because of this reason, ultimately it is adverse. This is what framed as a formula. This is what framed as a formula, and we are going by remembering all these things: SQ into SP, RSQ into SP, and what AQ into SP, then AQ into AP. Okay, first one is SQ into SP. Now I am trying like a student actually. Now I wanted to how to remember all these things: SQ into SP, RSQ into SP, AQ into SP, AQ into AP. So this is the structure. Based on that we have to do all these things. Okay, but don't try to do that. SQ into SP, don't always try to do that. Before that you should understand the meaning. Okay, so now we will work out this problem. Now we will work out this problem. So as per the formula method, as per the formula thing, 1, 2, 3, 4. What is the first one? SQ into SP. Okay. Second one, RSQ into SP. Third one is what? I think what is the formula? So AQ into SP, then AQ into AP. Okay. What is SQ into SP here? Standard quantity into standard price. Standard quantity into standard price. So 1, 2, 3, 4. Standard quantity to standard price, revised standard quantity to standard price, actual quantity into standard price, actual quantity to actual price. So you know standard quantity. Standard quantity is how much? 10 kg. Standard price is how much? Standard price is how much as per the question? 4 per kg. Revised standard quantity into the standard price, nil. Why? No mix. What is mix? For producing particular output, you are using more than one raw material. For producing particular output, you are using more than one raw material. X, Y, Z. For producing A, you are using A, X, Y, Z. Then this thing will come. What is the third one? Actual quantity. Actual quantity, how much you used? I think 12 kg. Actual quantity, how much you used? 12 kg you used. What is the standard price? 4 per kg. Then actual quantity, how much you used? 12 kg into 4.5 per kg. 4.5 per kg. So what I should do? What I should do? 1 minus 2. 1 minus 2 is what? Sub usage or yield variance. Okay, that is nil, 0, nil. Instead of 0 you can write nil. Not possible because there is no mix. And 2 minus 3 is what actually? Mix variance. That is also nil. Okay. Then then what else? Then 1 minus 3 is applicable? Yes, it is applicable. So 10 kg into 4 kg, 10 kg into rupees 4 kg equal to 40 rupees. 12 kg into 4 kg rupees is 48 rupees. Then 12 into 4.5 will give you how much? 48 plus 54. Correct? So next thing is 1 minus 3 equal to what? 1 is what actually? 1 is basically SQ into SP. SQ into SP, and 3 is what? AQ into SP. So what we are comparing actually here? SP. SQ into SP is there, AQ into SP is there. In both the boxes, what is the constant? SP is same actually. Then what is the difference? AQ SP. AQ SQ is different actually. Here it is in first box it is SQ. In third box it is AQ. That means we are comparing the quantity. If we are comparing the quantity means then quantity relates to what? Usage. We are comparing the usage only. Price is constant. Price is your standard price. Whereas quantity differs. Only usage. Actually how much I have to use, how much I used. How much as per standard, how much I have to use, actually how much I used. That is the comparison. Okay. That is what it is called as usage variances. That is what it is called as usage variance. 1 minus 3 is called usage variance. So SQ into SP minus AQ into AQ into SP equal to SQ into SP minus AQ into SP equal to how much? SQ into SP how much? 40 rupees minus AQ into SP how much? 48 rupees. So difference how much? 8 rupees. Is adverse or favor? Extra quantity I am using, more quantity I am using, or less quantity I am using? More quantity. More quantity means adverse. You are not using effectively, you are incurring more raw material. Okay, that is the meaning. Then what is the next one? 1 minus 4, or before that 3 minus 4. 3 minus 4. 3 minus 4 equal to what? 3 is what? AQ into SP. 3 is what? AQ into SP. 4 is what? AQ into AP. AQ into SP, AQ into AP. Comparison between AQ into SP, AQ into AP. Meaning, I am just comparing the price. Okay? Price variance. Price variance. That is AQ into SP minus AQ into AP equal to 48 rupees. That is what we arrived here. Correct? Just look at here. How much we arrived? 48 rupees. Here how much we arrived? 54 rupees. So 48 minus 54. 48 minus 54 rupees equal to 6 rupees adverse. What is the final one? 1 minus 4. 1 minus 4 equal to cost variance. Material cost variance. Equal to how much? 1 is what actually? Standard quantity for actual production into standard price minus actual quantity into actual price. This is what exact variance. So what is the amount? 40 rupees minus 54 rupees equal to equal to 14 rupees adverse. Okay, as I said in the PowerPoint, just look at the last bullet point. Material usage variance plus material price variance equal to material cost variance. As I said, material usage variance plus material price variance equal to material cost variances. Now I will show you that. So what I said, material usage variance plus material price variance equal to material cost variance. This is what I said, correct? This is what given in formula. So what is your material usage variance? 8 rupees adverse. 8 rupees adverse. Then what is your material price variance? 6 rupees adverse. Both are in negative, correct? That is adverse. So 8 rupees plus 6 rupees equal to 14 rupees adverse. What is your material cost variance? How much we got it here? Look at here, we got it 14 rupees. So that 14 rupees is arrived here. Okay, so like this. So before working out, you should write the formulas. And you should understand the formulas first. Then you can easily approach the answer. You can easily work out the problem. We'll go to the next problem now. I think I didn't change the slide. I'll just show you the workout. What I did here. Just go through now. So what I did, so material usage variance plus material price variance equal to material cost variance. That's what I said, correct? So material usage variance is 8 rupees, material price variance is 6 rupees, then material cost variance equal to 14 rupees adverse. This is what we arrived here. Look at this. This is what we arrived. 14 rupees adverse. Okay, so I'll go to the next problem. Just go through the question alone. The standard quantity and standard price of raw material required for 1 unit of product A are given as below. Standard quantity and standard price of raw material for producing 1 unit of product A is given below. Okay, so for producing 1 unit of product A, they are using material X and material Y. More than one material they are using. That means in this problem mix will come, yield will come, sub usage, and all those things will come. Okay, so material for producing 1 unit of product A, they are spending 2 kgs of raw material X and 4 kgs of raw material Y. Not spending, this is standard. This is their standard actually. And the standard price is how much? 3 rupees. And the standard price for Y is how much? 2 rupees. Standard price is for X is 3 rupees, maybe 3 per kg. We have to assume it is 3 per kg. Material Y 2 per kg. Okay, actual production, you come to the actual production. You just go through. Material X, they spent 1100 kgs. Material Y, they spent 1800 kgs. And the amount is also given 3410 for material X, 3960 for material Y. Okay, And what is the production? What is the production? Actual production is how much? 500 units. Actual production is how much? 500 units. For producing 500 units, actually how much they spent? 1100 kgs of material X, and material Y how much they spent? 1800 kgs. Okay. We have to identify standard quantity for actual production. Standard quantity for actual production. Actual production is 500 units of A, that is actual production. For this, what is standard quantity? For this, what is standard quantity? That we need to identify. That is the first step. Okay, we will work out the problem. For any problem formula, you try to know, first of all, you write these boxes. Try to write these 4 boxes. First box, SQ into SP. Second box, RXQ into SP. Third box. What is that box? What is that box? AQ into SP. Then AQ into AP. 1, 2, 3, 4. Okay. So SQ means what? SQ means what? SQ means standard quantity for actual production. In this problem, what is output? Output is what? Output equal to A. Correct? For producing this output, they are using 2 raw material. For producing this output, they are using 2 raw material. What is the raw material? Raw material X, raw material Y. Okay? Raw material X and Y they are using. How much they produced actually? 500 kg, 500 units of A they produced. So as per the question, what is the standard ratio? 2:4 for producing 1 unit of A. For producing 1 unit of A, they are spending 2 kgs of X, 4 kgs of Y. Then what about for producing 500 units? How much they will spend? For producing 500 units, how much they will spend? 500 into 2, 500 into 4. Then 1000 kgs of X. Then 2000 kgs of Y. This is their standards. This is called standard quantity for actual production. For my actual production, what is the standard raw material I have to maintain? What is the standard raw material I have to maintain? This is my standard raw material. This 1000 kg I have to maintain, 2000 kg I have to maintain to produce 500 units of actual production. Okay. So I arrived my SQ now. This is my SQ. This is my SQ. Okay. This is my SQ. Then what about RSQ? What about RSQ? Because as per the formula, what is the first thing? As per the formula, first box is what? SQ into SP. Correct? Here my SQ is X, my SQ is Y. Standard quantity how much? 1000 kg standard quantity how much for Y? 2000 kg into standard price per kg given in the question. 3 rupees, 2 rupees. 3 rupees, 2 rupees. Then what is the total? 1000 into 3, 3000 plus 2000 into 2, 4000. 3000 plus 4000, 7000. Okay. So first box is over. First box I identified the answer. Correct. First box I identified the answer. Come to the second box. Second box is what actually? Always write this box, even though again and again you please write down. Not an issue. Second box is what? Revised standard quantity into standard price. What is this revised standard quantity? Revised standard quantity. RSQ is what? Revised standard quantity. Okay. How to identify this? Revised standard quantity is nothing but standard mix for actual quantity used. Standard mix for actual quantity used. Okay. What is the meaning, sir? Actual quantity how much used in the question? Actual quantity how much used in the question? Actual quantity how much they used in the question? If you go through the question, I hope all of you are having the material with you. I am just referring the material only. You please all of you take the material. Second question. If you go through the question, actual quantity for X 1100, Y how much? 1800. Then total 3900. This is the actual. Okay. This is the actual. Then what is revised standard quantity, sir? How to identify that? Revised standard quantity, as I said, standard mix for actual quantity used. What is your standard mix then? What is the standard mix? How to identify that? Your standard mix is what? How much you identified? X how much you identified? 1000 kg. Y how much you identified? I think 2000 kg. This is your standard mix. Your standard mix is 1:2. Standard mix is what? 1:2. Correct. In this 1:2 ratio we have to allocate this 3900. How to do that, sir? 3900 divided by 3. How much? Just take your calculator. Just all of you please take your calculator. 3900 divided by 3. Sorry, 3900 divided by 1:2. 3900 or something else. Sorry, I think I did some mistake. What is the mistake? 1100 plus 1800 equal to 2900. This is the mistake. Sorry for the inconvenience. So 2900. So 1100 plus 1900 equal to 2900. 2900 divided by 3.